Hello there, beautiful traders. Welcome back to my channel. My name is Desmond Samuel, and this is yet another episode of our weekly Forex Outlook. Now, in case you're new to this channel, my name is Desmond Samuel yet again, and the Forex Weekly Outlook is a segment of my YouTube channel that I've dedicated to coming on here every single weekend to give you guys the best and the juiciest profitable trading setups across about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, financial instruments. So don't go anywhere. Sit right back because I like to leave the best for the last. All right. So without wasting any much time, the first pair on the list will be EurUSD. Now, if you check from my previous weekly outlook, I called out EurUSD from all the way here, all right, all the way from 1.09490. I said to you guys that this was a supply level right here. This was a supply level right here. And whenever you see things like this happen in the financial markets, you should be rest assured that the market will always come back to test that supply level, all right? Because this is an impulsive drop, right? Now we failed to get a decent pullback, and this was a solid supply level on the daily and on the 4-hour time frame. So I was anticipating that, okay, fine, since we've actually created this for daily time frame supply level, we should actually see a pullback, a decent pullback that will line up, juicy and nicely with the Fibonacci too. And you guys know me, I love to use my Fibonacci. I don't do anything without Fibonacci, to be honest. So the market pulled right into the 0.618 and it dropped, and it has been dropping since March 15. Came pull back here to test this double top. Now look closely, we have this double top here, double top formation. Then it came closer to test the neckline here, neckline, drop, pull back to this. So it was practically a 1 hour structure, 4 hour structure trade. All right, so break of structure here, pull back, break of structure here, pull back, drop. So my first target for EurUSD has always been 1.07442, which is this bar right here. Actually, let me make this, yeah, so which is this bar right here, and we came just a few pips shy. All right. Ideally, I'm still banking on we and on us just pinning through this particular bar right here. All right. So that is that was my my first target for EurUSD. Now, ideally, this is a third touch of a trend line. You see, now I don't just analyze in one direction. I try to see if there's anything that could potentially stop my trades from playing out, all right, or could potentially limit my profit target. And so far so good. It is this guy right here, because I have seen a trend line coming up from. So we have this first touch from the lows of 2023, October 2023, and we have this first touch, second touch, and the market reacted nicely off of these touches. However, moving into the future, we have this high, this low, lower high. So ideally, we should see a lower low here and then a pullback to this lower high before we drop this guy to the downside. So following the laws of price action, this is the head and shoulders pattern, chart pattern here, and this is usually a reversal chart pattern to the upward trend that happened here, the medium term trend that happened here. And how is this validated is if we do get a break of neckline. So this is a head and shoulders pattern. However, this is not valid until we break this neckline. We actually do something like this, all right, and then we pull back. Okay, so once we break this neckline here, all you have to do is just wait for the pullback. You can scale down to your 4-hour time frame or whichever time frame that you love to trade. I personally recommend the 4-hour time frame for my entry, and the least I could get down to is my 1-hour time frame. All right, so we need to see a clear bearish engulfing daily candle close, at least 2 daily candles close below here. Then a pullback to this supply level here will be decent, because this was also a supply level standard. This was also a demand level. All right, so we need to see a pullback to this, just breach this point. All right, pull back to this bar, and then we should have about 200 or 250 pips thereabout to catch on this particular pair. All right, so we have two obstacles on our way, on our path, and one of that is this ascending trend line here, and then this supply or rather demand level right here. So in the event that we get to break below this, we should actually drop. All right, so now this is how it's gonna happen. Okay, you can see how we've had. Let me show you guys something real quick. You can see how we have pullbacks for each time frame, or should I put it that way? Okay, so we have minor pullbacks and we have bigger pullbacks. All right, so you can see how this pullback happened. One, so this pullback happened with this high. All right, it didn't come for this high. It came for this high, this low, this high came validated. Now for this high, yeah, the market had to pull back significantly. All right, a bigger pullback had to occur for us to have a decent pullback to complement this high, this low, and then this high. Okay, so this is like a structure within structure. The overall structure here is obviously bearish because you have a high, you have a low. However, the market will not just drop from the high to the low. You will see some decent internal structures, all right, to place more trades. That's it. That will most likely happen because I mean it has already happened here. All right, you can see the market drop from here to here. However, we had some decent pullbacks, decent pullbacks, decent pullbacks. We had a bigger pullback here, drop, decent pullback again, decent. So you see this whole this particular drop from here to here, you could get like trade one, trade two. In most cases, trade three. Those of you guys that are very, very good with the lower time frame entries, trade three. All right, and that's it. Trade one. Now trade one, trade two. All right, so you could plus or minus you could take 5 trades on just one particular drop. Okay, so and that's the benefit of doing a top down analysis. So you get to see all your potential trading opportunities. So that's by the way. So ideally, what we should see first is a pullback that would actually validate this high. All right, this high here. So this is a high, this is a lower high. All right, so we should ideally we should see a collapse that would first of all complement this high, drop, and then now come for a bigger pullback that will actually come and complement this particular pattern, this particular high. All right, so that is exactly what's going to happen. It's not going to be a linear move all the way down here. Nope, it will first pull back, first smaller pullback or minor pullback, drop, then a bigger pullback will come for this particular high. So that's that about EurUSD. So going into the month of April, we should see so we have some fundamental events coming up, and one of them is the almighty NFP. So the NFP should serve as a catalyst to fulfill the break of structure here. If indeed this pair is actually going to bleed all the way to the downside. Now I am actually I'm 60% bearish on EurUSD, provided that we actually stay above this yellow bar. Now, in the event that we do break below here, because if you look closely now, we had this head and shoulders pattern form, and then we have another head and shoulders pattern form. So this is the head, this is shoulder. So we should see a break below this. So this is just a lower time frame. Actually, let me just go down to the lower time frame and show you guys how this looks, because I feel like I've spoken a lot on the higher time frame. All right, so this is how the higher time frame, the lower time frame looks like. All right, so we need to see a decent pullback. Just see, we have too many candlesticks on the lower time frame. All right, so this is how it looks like. Okay, so once we smash into this yellow bar, ideally we should see a decent pullback first. We should see a pullback first, collapse. Okay, they'll have a pullback for this high, and then we would have a proper pullback that will come bigger for the entire drop. All right, so actually you could still take some more trades on this. All right, you could still take some more trades on this, and the first trade would be, first of all, allow us rally, or rather drop to this yellow bar. All right, let's clear this trend line, because provided we are still above this trend line here, this market could still blow all the way up. All right, I've seen this market reverse at this trend line twice. Okay, twice. The first one was the October low here, 2023, and then the second one is this February 15 here. So anything is possible, but the market looks heavy at the moment. It looks like it wants to drop. So for me personally, my ideally I would love to see us clear this trend line, fall, at least just pin into this yellow bar, then pull back would be nice for us to drop this guy on his head. So that's that for EurUSD. I'm actually still bearish on this guy. I know my team members have their positions open at the moment. They are still bearish. Some of them entered here, some of them entered at the very high of this rejection here. So I called out this trade on my YouTube channel. If you doubt me, check my previous video, you would actually see it. All right, so that's that about EurUSD. So one thing, like I said earlier, we need to see a decent drop. Okay, fall fully to this point, break this trend line, break this So now this demand has been broken properly. However, this trend line is what's holding us. So we need to break out of this trend line and then come for a pullback. So once this pullback is fulfilled, we can now hop on and then drop this guy all the way to the downside. So that's that about EurUSD. Next pair on my list will be GBPUSD. So for GBPUSD, oops, is that the chart? Is that the chart? All right. Nope, 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 nope. That's not the chart. Hold on, guys. Hold on. So for GBPUSD, it has something slightly similar to the euro dollar. First of all, let's go from the higher time frame and see what's really cooking on the cable. So just in case you're wondering why I'm calling this the cable, that's just another name for GBPUSD. It is also known as the cable. So for GBPUSD is now this pair has been in a range since November 2023 for months and months. That's been in a range. So we picked above this bar here, which was the resistance at 1.27990. However, we failed to sustain above that. We actually collapsed all the way back down. Now, usually when things like this happen, we tend to have this is what we call fake out. All right. So we tend to have the market move, exponentially in the opposite direction. So that's what's currently happening. A fake out here, stop early buyers, then collapsed all the way down. So ideally, this should drop all the way down here, okay, before a pullback comes. If at all we'll be seeing a pullback on the cable. Now, I'm not really a big fan of range trading. I'm not really in any trade on this pair. I don't like how it is forming. I'm not just a big fan of range. All right, so that's why I box this guy up, because if you're gonna go up, you have to break this resistance anyway, and if you're gonna go down, you have to equally clear the structure. As long as we remain in this range, I don't have a business with this pair at all. All right, so what I'm waiting for is for us to decide, is either we collapse to the downside, pull back, we drop, or we collapse, or we actually go ahead and blow out, above this range. Okay, so for me, nothing much on the cable. However, I've boxed this guy up. Hold on. I've actually boxed this guy up, and whatever he wants to do, let it do. As far as it remains inside of this range, it is none of my business. All right. I would only be interested in this pair if we do come and clear this lower bar here at 1.25325 and pull back. Then that would be a decent shorting opportunity, because I have space to the downside. All right, I've got about 400 pips on the cable, so this is a lot more promising than the euro. I mean, don't get me wrong. Don't get me wrong. They are both promising. However, in terms of profitability, this is I have a bigger room. I have room to the downside, enough room to the downside. Once it clears and pulls back, I have room to the downside. Okay, so part of my favorite picks for the month of April is GBPUSD and EurUSD. So the next pair on my list now will be NzdCAD. Now I had something forming on NzdCAD that caught my attention, and I felt the need to bring it to your notice, because I don't like to be the only one eating off of this market. I want the entire team to eat. So NzdCAD looks juicy. It looks juicy to the downside. It looks like it's about to collapse. All right. As you can see, I've already set my my trading view alert. So let's just have a quick run on a quick overview on NzdCAD. So for NzdCAD, we had this impulsive move, correction, and then I actually thought that we're actually gonna blow all the way out. However, that didn't happen, because the overall trend on this guy is very, very bearish. It is very, very bearish. So what the market simply came to do was to fulfill technical levels at this supply level here on a weekly supply. Okay, so the market came in here, and it has been ranging for a while, ranging. And now, how do you know when the market is actually about to reverse? Is now you have an impulsive move, you have a pullback. Now, ideally, if you are this is A, B, C, D completion of this move. However, even this market was going to rally to the upside, it would have actually cleared this supply level and put back. However, that didn't happen. Instead, we came to put a lower high, because this is technically a lower high from this high, and then we did not only put a lower high, but we came in to break the ascending trend line, and then we actually broke below the demand level, this weekly demand level, and this is a weekly candle that is about to close in about 2 hours, and I don't see this candlestick going all the way up in 2 hours. All right, this is heavy. This is looking heavy. So if I now scale down to my daily time frame here, it makes a lot more sense. All right, it makes a lot more sense. So this is how it looks on the daily time frame, and I I anticipate the first pullback to this bar here. Reason being that this was the supply level. You know, after this market broke out, it came back to retest this level here. Let me just go on to the 4 hour time frame so you see clearly. It came back to retest this whole level here, and it played around here for some days before it collapsed. So this is a solid supply level. So I'm waiting for the market to just do something like this, just pull back into this point here, and then I would actually collapse this guy on actually jump on the sell trade and ride it to this point. So my first profit target for NzdCAD will be obviously the equal low, which is 0.80790. All right. So if we do break below there, then we should drop all the way to the blue bar on NzdCAD. So once again, I'm bearish on EurUSD, I'm bearish on GBPUSD, I'm bearish on NzdCAD. All right. So the next pair on my list will be NzdUSD. NzdUSD. See that one? Nope, 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 nope. Okay, so the next pair on my list here is NzdUSD. Now, this is going through something similar to NzdCAD, similar thing. So we had this impulsive move, and then we actually had the correction. However, we failed to stay above here. Actually, this was, if you check my previous weekly outlook, you will actually see me highlighting these levels here. I was like, yo, listen, as long as we remain under this yellow bar here, this pair could actually collapse all the way down, and it actually did that because we had this head and shoulders pattern, and this is a neckline break. Okay, and this is also validated. Now the only pair that has a similar setup that has not been validated yet is the EurUSD. All right. However, for the NzdUSD, this has been validated. This has actually been validated because this is the head, this is left shoulder, this is the right shoulder, and not just the right shoulder, but it actually gave us a double top, and then now we have actually cleared this neckline here, and we are looking to break all the way to the downside. So ideally, I would love to see a pullback to this level here. So now the first pullback that we could have, actually, hold on, let me just check something. So the first pullback that we could have would be from here. You can see to maybe at this point here. So we should see a decent pullback here first, and then we take the trade to this point or to this point, and then we should see a bigger pullback coming in here to actually validate this entire, from this high. We should see a decent pullback coming in. All right, so the market just moved strong. You can see. All right, so my first profit target will be obviously here. Obviously, the recent low, all right, equal lows. And then if we do break below here, we should see the pair drop here. Then once it gets here, we should see a decent pullback to come and complement this entire high here. So this will be a high, this will be a low, and then this will be a lower high. However, within this particular high and low here, we should see a decent trading opportunities in terms of internal structure and external structure. All right. So by the way, if you want to know more about this, find the link in the description. There is a mentorship program that will get to teach traders how to actually identify these levels and how to take trades profitably. So it is applicable to every level of trader, newbie, intermediate, even expert, and you just want to brush up on your entry, because I have a lot of people have issues on entry, and then we have the entry criteria, entry strategy as well. So we have these things broken down, in details. So the next pair on my list here will be the S&P 500. Hold on, guys. Let me just go through my phone. I think I saw something. So the next pair on my list will be the S&P 500. Now I have been very, very, hold on. Now I don't know what let me see. I doubt if that's a chat though. I was gonna pop out the chat, but it's not letting me. So this pair has been extremely bullish, very, very bullish, right from the end of actually, hold on, let me see if I can bring up my my own chart. All right, so this is the S&P 500 that I was talking to you guys about before I got a call. Now hold on. Okay, so overall, this is the SPX on the weekly time frame. All right. So we had an inverse head and shoulders pattern formation here, and then we had this descent break and retest that took an entire year to play out. All right. So it took an entire year to form, to get ready, as you can see here. So this lined up with the Fibonacci. It lined up with the trend line. All right, and then this also lined up with the demand level. All right, so this was a juicy trade. However, unfortunately, I did not take the trade because I wasn't really feeling S&P 500 at the moment because I was very busy. However, we have actually cleared the all-time high of S&P 500. We have actually cleared the all-time highs, and then we keep doing new highs. All right, so now ideally we should actually pull back to this level here. However, this isn't even showing any signs of slowing down. Every single time he puts in a bearish candle, he gets a new bullish candle. He tries to form a bearish structure. However, that doesn't happen. All right, so now so this is quite linear. All right, so this is a very linear trend, and it is unhealthy. However, mind you, the S&P 500 does not give you your normal currency pair pullbacks. Okay, it has always been that way. It does not give you a normal currency pullback. The kind of pullback you get from Euro USD or GBPUSD is not the same. It's not the same as S&P 500. So ideally, I need to see a pullback to this level to 4,823.53 basis points for the S&P 500. But in the event that doesn't happen at all, what we could do is which is advisable is that you actually plot your bar here. All right, so just put your bar there. So if we do see a break above and a pullback, you can take some scalping trades on the S&P 500. However, I genuinely feel like this is due for a pullback. This was due for a pullback like last week. All right, so we need to see a pullback to this blue bar here, and then we actually get to ride this guy to the upside. If indeed that's gonna happen, however, from the look of things, we could actually keep pushing all the way to this point here. So in the event that you see a break above this yellow bar here, just wait for a decent pullback and just keep riding this guy to the upside till whenever it is due for a pullback. All right. Or to whenever it decides to pull back, but currently it is long overdue, so you have to be very careful. And this trend is very linear as well. This is a very linear trend. This is not a healthy trend at all. So this is this is very linear. Even on the weekly time frame, it is very linear. So you have to be very careful. You can see, so you have to be extremely careful if you're going long on this pair. All right. So as you can see, I already had my tool here, so I was actually anticipating a pullback. Now this was the demand level that got validated, and then so this created a weekly demand level here. So we need to see a pullback to this level, because this is the first minor pullback. So this was where the demand was actually created. All right. Now we need to see a pullback to test that demand level again before I actually rally all the way to the upside. That's how it happens. Even in a bullish trend, in a bearish trend, the market first of all gives you that it creates the demand or it creates the supply, then it goes back on a full scale to retest that, and then give you the proper move. All right, so far so good. I'm still very bullish on this guy. I'm actually waiting for a pullback. In the event that a pullback does not come, it's quite fishy because we just had a bullish engulfing candle that engulfed 1, 2, 3. So it's a bit dicey at the moment. However, I'll be staying off S&P 500 for the moment, because I'm not gonna lie. This is a risky setup. This is a risky setup because you could actually be banking on a break and retest, and then next thing, this is where it actually decides to pull back, and then you could actually wait for the pullback, and this happens to be the peak, and then it decides to fall and then pick up again. So that's just that about the S&P 500. The next pair on my list is US oil. Now I have a lot of people that have been long US oil, justifiably so. All right, so they know exactly what they're doing. So if you see someone going long on US oil, you should actually applaud them for the balls of steel. So we have actually come to hit a resistance bar or a supply bar or a supply level, and this is also a head and shoulders pattern for me here on the US oil. However, I'm actually very, very bullish on this guy. I'm actually anticipating that we would actually clear out this supply level and then pull back before we actually get to this key level. All right, so US oil, I'm actually very, very bearish on US oil. If we scroll down to the daily time frame, let's see what we have there. Guys, my energy is a bit low today because I'm tired. I'm very tired actually. Okay. So the only barrier on our path here would be this yellow bar and then this trend line here. So in the event that we actually get to blow out of this pullback, that'll make for a decent opportunity to add to the existing positions and then ride this guy all the way up. All right. So at the moment, I'm not really bullish on this guy, neither am I bearish. This is the 50-50. Right? We could actually come in here and then collapse all the way back down this way. All right, so this is a 50-50 point for me. We could actually collapse all the way back down because this could easily be a break and retest into a Fibonacci point. All right. In fact, this is a lot more solid in the sense that you have a high, a low, lower high forming here. You have this resistance bar, which is also a break and retest. Then you have the Fibonacci, then you have the trend line. This is you have 4 confluences pointing to the downside. So you have to be extremely careful. All right. However, let me see something real quick. Okay, you know what? Let's do it this way. How I like to do it. I'm only bearish on this. I'll be hopping on a sell trade on this guy if he come and clear break of structure here. So if we do break the structure here to the downside, because currently the structure is bullish. We keep printing highs and higher lows and higher highs. All right, so in the event that we come in and then break this structure, that's invalidate this uptrend and then pull back, I'll be hopping on a few sell trades to the downside. However, this is in between a resistance bar, a support bar, a counter trend line, a descending trend line, and a right shoulder of a head and shoulders pattern. All right, so whichever one plays out, I am actually cool. You see, you can make money in any scenario. If this decides to rally, it's all well and good. If this decides to drop, it's all well and good. So like I said, criteria for going long is that we have to clear this yellow band and then this descending trend line, and then we actually wait for pullbacks to ride this guy to the upside. In the event that happens here, my prime target for this will be 94 dollar per barrel. Okay, for oil it is per barrel, so $94 per barrel. However, in the event that we actually get to break below this bar here and then this downtrend holds, my first target will be $72 per barrel, and then if we do clear that as well, we should actually see the US oil collapse all the way to $66.13 per barrel. Okay, so those are just the contingency plans. It could either go up or come down, but in whatever scenario, you have to place yourself well so they can actually make money off of it. All right. So the next pair on my list now will be gold. So I haven't had any much action on gold, to be honest. It has been very, 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 very choppy, right? On gold, it hasn't really been the easiest of trends. However, I put this buyer, hoping that gold will break below and then retest and come for a decent pullback to this point here. I thought we were actually due for a pullback, and we are actually due for a proper pullback down to this key level here, because since we broke that, we've been on a very linear move. We've not had any decent pullback. However, gold did what gold does normally. All right, so he instead came to print a higher high. All right, so let's scroll down to the 4 hour time frame and see what happens. Now I'm not really a big fan of this kind of trend. I'm not really a big fan. I will not lie to you. However, this was the first break and retest happening here, so I anticipate a deeper pullback to this point before I actually continue to the downside. All right, so this is the low, this is the high, so we should see gold pull back to this level here, to this around $2,192 per ounce, and then we should actually have a decent trade back to this recent high. All right, so whenever you have a breakout and you have a pullback, your first level target should be the recent high or the recent low. In the sense that if you're in a range like this and then you break out to the upside, your first, if you go long here, your first target should be this high, which is $2,233 per ounce. However, if it is to the downside, your first target should be the most recent low. All right, so that's just that about gold. You should actually wait for a pullback. If indeed this guy wants to pull back, you should actually wait for a pullback to 2,187 and then jump on the buy trade. However, mind you, this pair could actually collapse all the way down to $2,078 per ounce, because we are actually, this is a solid demand level that is yet to be retested. We've created this demand level on the daily time frame and on the 4-hour time frame. We are yet to come back and validate that demand level. All right, so that's just that about gold. However, for me to actually have any trades on gold, we need to see a pullback to around $2,190 per ounce. That would be a lot more healthy, because this is the first pullback here, and we need to see a bigger pullback to this point. All right, so this was the demand level that was created on the 4-hour time frame and on the daily time frame. So we need to see the market pullback and then give us a bigger trading opportunity. The next pair on my list would be EurJpy. Now, for those of you guys that have been with me the longest, you know that I've been bullish on EurJpy for a long time. All right. Now let's go to the daily time frame. So we have a structure, right? Structure and a bullish pattern here. All right. So we've had this. Now, if you look closely, now let me give you guys some free game. If you look closely, we have the first breakout that comes with a minor pullback. They have the bigger pullback that leads to more money. That's more pips, more that covers more distance. All right. And that's exactly what happened here on EurJpy. Now this pair is still very, very bullish. However, you guys need to take into account structure. So structure, I trade by structure. I don't know what you guys trade by, but I strongly recommend that you go by structure. So judging from a structural standpoint, we had this break of structure here. So this was a double top, and then this was the pullback for this entire move here. By the way, we call this entire move, if it does, we check my previous weekly outlook. So now we've broken structure to the upside, and then we failed to retest. Now the only retest we had, the only feasible retest we had was on the 4-hour time frame, and that was here. Okay, that was after the breakout. So the breakout came, the pullback came, and we rallied. Now whenever you have this kind of pullbacks, this is a demand that has been created, so you should actually wait for that demand. So 9 times out of 10 times, the market usually comes back to come and revalidate that in that demand. All right, so it actually comes back to test that demand, and this demand lines up well with the Fibonacci point and the break and retest, which is the support. Is this resistance bar break and turning into support. So from swing low to swing high here, we have this decent Fibonacci play that is actually gonna happen. So I'm actually anticipating that the EurJpy will collapse all the way to 162.400. All right, so balance out here, and then we should actually see a trade all the way up to this recent high. So my prime target for EurJpy once again is 168.500. All right, so 168.500 is my prime target for this guy. However, the market will not just rally all the way up. All right, it has to move in structure. All right, structure by structure. All right, so that's about EurJpy. Now, my next pair on this list is CadJpy. Actually, let me just do it here. So my next pair here is CadJpy. Now for the longest of times, I've been actually very, very bearish on the JPY index. Okay, so we've actually come to hit. So the first move that happened here was a validation of a demand level. Okay, remember what I said. You have the first pullback, and then you have the bigger pullback. So this was the first pullback, and then we had a bigger pullback that came in for a Fibonacci play, and that was what happened. So now we've hit the recent high. So ideally for me, I like to see a break and retest. So if you can get a daily bullish engulfing, 2 candles close above here, and then a pullback on 4-hour time frame, we should actually see this guy rally all the way to 122.000. All right, so that's my prime target for CadJpy is 1.122.000. Now you should actually wait to see something like this. Right, wait for wait for the market to break above, pull back, and then wait for a candlestick pattern here. All right, just wait for a nice entry time frame, entry pattern here, either a counter trend line break and close, or a 4-hour candle bullish engulfing candle form, and then you can actually ride this guy to the upside swing. However, feel free to take your profit here, all right, and wait for a decent pullback. All right, so we trade structure by structure. All right, so that's that for CadJpy. And the last pair on my list will be the dollar index. So now it's time for us to talk about the chief of all pairs, the dollar index. Now, if you're new to trading and then you're wondering what the DXY is, so the DXY is basically a basket of every other currency versus the US dollar. All right, so that's why it's called the dollar index. Now, in my previous weekly outlook, I came on here and then I said to you guys that I'm actually very, very bullish on this guy. Reason being that we had this trend line break here. However, the market is just struggling to move. It lacks volatility at the moment. All right, that's why I see most of your trades take a very, very long time to play out, because this guy is stuck at this point. Now, this is the weekly time frame bird's eye view. We've had this inverted shadows pattern here, and we are actually testing the neckline. In the event that we actually break out of this neckline and then pull back, this is due for a rally to 1-1. Long term my long-term target for the DXY remains 114.778. All right, so however, for me to be very, very confident on this guy here, we must see we have to see the market come in and clear this 104.976 high. All right, so once we can clear it, you can see it is out of the trend line. In fact, it actually broke above the trend line, then came back to retest it, and then it is heading in the up direction. All right, so now we need to see, obviously, for our trades to play out on EurUSD and GBPUSD and NzdUSD and the rest of the pairs, we need to see this guy come on here, pull back, and then we actually hop on the trade. However, for us to see a big blowout on the dollar index, we need to clear this 104.865. So once we do clear that 104.865, we have space. We have space to the upside. Okay, so you can now start swinging your trades, however you like it. However, at the meantime, it's just practically scalping, in and out, because you don't know if it's a sustained break. Okay, although we've had 1, 2, 3, 4, 5, 6, nearly a week. In fact, we've had a week above here. Okay, we've had 1 week break above here, break and close, because the market is about to close in about a few days time. For the dollar index, this is it's gonna close in 3 days and 4 hours. All right, so and we are currently on Friday, so this candle should close anytime. No, actually, yeah, so this should actually close in 4 hours. So this candlestick should close in 4 hours. So today is Friday, so this candlestick should close in 4 hours. As you can see, we've had week 1, week 2, actually this will be the third week out of this trend line here. So I'm actually waiting and anticipating if we can actually clear these highs here, this 104.865, then we actually due and then ready for a change in trend or a continuation of trend in when you're talking of the weekly and the monthly time frame perspective. However, a change in trend when you're talking about the 4 hour and the daily time frame, because I've been very, very bullish. I've been an advocate for bullish dollar since inception, all right, because from the monthly time frame, this guy is very, 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 very bullish. We've had this rally, all right, so this is just a pullback and a consolidation, and for every impulsive move or for every trend, there's always a resulting range or consolidation, and that is exactly what we are facing on this pair. Yeah, so a decent break above this 104.865 would actually, serve as a catalyst for the entire market to actually start trending. All right, so that's that about this weekly outlook. Now, if you have anything to discuss with me, check the description of the video. It has my Telegram community and it has my email. Now feel free to shoot me a comment, leave a like, and be sure to subscribe, and then turn on the post notification so that next week when I come on here and then I give you guys, or I upload this video, you'll be amongst the very, very few to see it and then take opportunity. All right, so thank you very, very much for sticking through to it. And once again, my name is Desmond 7, and then I'll see you guys in the next episode. Peace out.